All right, welcome to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network, and today we're going to be highlighting Palantir. Palantir, as we know, is one of the premier companies in the artificial intelligence space. This is a company that essentially is deploying its software applications and data analysis that is born from the Department of Defense, in other words, a government contractor, and they're actually deploying it now into the private sector for commercial applications. And we know artificial intelligence has been the theme of the past couple of years, and Palantir is really a demonstrative growth story in that particular space. Palantir initially started off with their Gotham software for the Department of Defense. It's primarily a data analytics and artificial intelligence platform. One of the growth stories behind Palantir is its commercialization. It's actually deploying its technologies, including its artificial intelligence, for the private sector. So when the company reported earnings going back to the 3rd of February, the company demonstrated some significant growth both in earnings and sales. The company posted about a 14 cents adjusted earnings profit. Now that grew about 75% year over year, while at the same time the company boasted an increase of about 36% in sales at $836 million. There were some highlights that are significant to Palantir. One is their commercial growth for the quarter grew about 64%. So it gives you an idea that the company has been growing its private sector distribution quite nicely. The other thing is their government contracts grew about 45% year over year. Total contract value for the quarter also was a significant increase by about 134% compared to the same quarter last year. While the company's been growing its sales and earnings more than double digits, the company has also been boasting profitability metrics that are quite robust. In fact, if you look at the free cash flow for the quarter as reported by Palantir, the yield is about 63%. The company generated close to $500 million in free cash flow, while at the same time, the customer count grew about 43%. For the fiscal year 2024, the entire year, the company boasted total sales by 29%, but the other thing is the company raised its guidance. If you look at fiscal year 25's top-line sales estimates, they're expected to grow by 31%, while earnings growth is expected to continue to about 40% of total sales. Now, Palantir appears to be well-positioned within the context of the second Trump administration. The company helps integrate complex data sets, it helps improve operational efficiencies, and also provides data analytics for the private sector as well as the Department of Defense. If we look at Palantir, at least on a year-to-date basis, the stock has nearly doubled. It appears the company, as generating more contract value for its end customers, has actually been taking away market share from its competitors, primarily some of the legacy players in the defense technology space. That includes Booz Allen Hamilton, Leidos, Khaki International. These are competitors in the legacy defense space that have performed poorly on a year-to-date basis. Now, Palantir's unique value lies in its ability to integrate complex systems within artificial intelligence ecosystems. The other thing is it's providing its clients with actionable insights to help them make better decisions. Not only is Palantir growing in the double digits on a percent basis, it's growing profitably. If you compare Palantir's gross margins at over 80%, that gives you an idea that the company is generating high returns on equity relative to total sales. Despite the promising commercial growth revenue over 64% year over year for Palantir, as denoted by their Q4 earnings, there are some risks that we have to consider with this name. First off, there are some geographical imbalances to consider, especially with top-line sales growth in the United States being the majority proportion of how Palantir generates sales. If you look at the European sales, which represent about 13% of total revenues, they only denoted about 4% growth in that particular area of the world. Now, in context of some of those geographical imbalance risks that Palantir may face going forward, there are also some concerns that analysts have based on valuation. For instance, if you look at the fiscal year adjusted EPS of 55 cents expected for 2025, relative to the current price, Palantir is trading at over 200 times its forward earnings. That would be considered lofty relative to even 47% earnings growth. When looking at the weekly chart, taking into consideration the relative strength index at over 83, one would say potentially the stock is overbought. In addition to the high RSI, if we take into consideration the stock's 20-week moving average, which is roughly around $80, the stock seems to be retracing those levels as a trend continues to the upside. Despite strong financial performance, the company's reliance on a few large contracts poses a risk to Palantir if these contracts are lost or not renewed within the context of the government efficiency programs that are yet to be announced. Next week on Tech Corner, we will be highlighting Supermicro, evaluating the recent business update the company provided. Also, a few other tech names to keep on your radar include Unity Software, which we're reporting on Thursday alongside fintech company Block, but also take into consideration Aristanet, large network hardware company, which we'll be reporting on Tuesday as well. Have a great week.